Welcome guys to a new video. In this episode we're going to discuss two newly introduced ICT concepts. Very few people know about this. I believe that this will help you a lot in your trading. All right, I wanted to show you this piece of price action right here. This is the US dollar against the Canadian dollar. All right, as you can see, we have this market structure shift. So you can see that price never took liquidity from this, but this is an SMT divergence. So in other correlated pair, price did take liquidity. Then in this pair, we don't have to take liquidity from this. So we have a market structure shift right here. We broke this recent swing. We left the fair value gap and price kept going. Now, if you remember the 2022 model, then what Michael talks about is you want to see a market structure shift, then a fair value gap, and you enter on that fair value gap. So, but as can you see here, price never filled this fair value gap right here. And this actually happens a lot, very often, especially in the lower time frames. Price leaves a fair value gap behind and you put a limit order and price never reached to it. Now, why this fair value gap left open? This is our topic tonight. All right, we're going to discuss why this fair value gap left open and how can you anticipate a fair value gap to stay open, and how can you participate in this move right here without missing it. All right, and now before we start, if you know the answer, if you can guess the answer of why this fair value gap stayed open, now I want you to write it in the comment section. All right, if you don't, then you will know by the end of this video. So bring a pen, a paper, or you have an online notebook, I don't care, because this will be an interesting topic tonight. Before we start, please hit that like button, all right, because that will make the YouTube algorithm recommend my video to more people, and more people will know about this. All right, now without any further ado, let's just get started. So as you can see, this fair value gap stayed open. All right, we're gonna introduce this fair value gap is called a breakaway gap. One fair value gap, when price leaves a fair value gap without filling it, it will named a breakaway gap. Now, why this happens? How can you anticipate a fair value gap to left open? There's a concept called a PDRA, called a balanced price range. All right, now what is a balanced price range? A balanced price range is when you see this formation right here. A balanced price range is when this candle right here, price offer buy side, then offer sell side, and then buy side. So this is called bullish price range, bullish balanced price range. Again, you will see price, this is the open of the candle. It offers buy side, then a return and offers sell side, and then buy side. And the next candle is the up close candle right here. So this, and when there is a fair value gap below this formation right here, this fair value gap will likely to be left unfilled. All right, and this, I'm gonna show you examples, real candles examples, so don't worry, just stick with me here and focus on what I'm gonna say. On a bearish balanced price range, you will see that the candle opens here, it offers sell side, then buy side, and then sell side. So you can see that there is no fair value gap here, but the price will react to this. So how to draw this, how to identify this balance price range. So you're gonna draw the first line on the bullish balance price range. You will draw the first line on the body, on the upper body of this candle right here. The candle that offered buy side and sell side. And on the next candle, the next other candle, you will draw on the wick, on the lower wick or line. So this right here will become a balanced price range. The price will retrace to this. All right, it will retrace to this PD array and continue up. Same here. You want to draw the line, the first line on the lower body of the candle that offered sell side and buy side at the same time. And the second line on the third candle, on the upper wick of the third candle. So memorize it like this. You want to see buy side on the bullish pricing. You want to see buy side first, sell side, and then buy side. Here on the bearish balance price range, you want to see sell side first, then buy side, and then sell side. Now let's go through the examples together and you will understand far better. Now let's go to our first example, first one I showed you, and try to apply this formation on this piece of price action. Now, as you can see, this candle right here offered both sell side and buy side, and the next candle offered sell side. So this will become our balance price range from this and this candle right here, the wick of the candle. And as you can see, price retraced to this balance price range. You can see that the bodies couldn't penetrate the lower side of the balance price range, and price kept going down. And this fair value gap never got left. Thus, it would become a breakaway gap. All right. Let's move on now to the second example. This is the 4-hour chart of Australian dollar against the US dollar. So in this price action right here, can you identify a bullish balance price range? This one is a little bit tricky, so focus a bit. Now, as you can see, we have this fair value gap right here that been left open. It never got filled, so this becomes a breakaway gap. And you can see that this candle right here offered buy side, then offered sell side. All right, and the next candle offered buy side. So this will become a balance price range, a bullish balance price range. You can see that the market, the price, these candles right here filled this balance price range. And as you can see, the body of the candles never closed inside the balance pricing, and price kept moving. And you can see that this wick right here never filled this fair value gap. So this is a valid breakaway gap and a bullish balance price range. Moving on to the third example. This is the Dixie, the US dollar index, a 4-hour chart. Please pause the video and try to identify a bullish balance price range. I hope you pause it. As you can see, we have a fair value gap right here. This is a breakaway gap. Why this is a breakaway gap? Price never filled it, and this is the reason. You have this candle right here offered buy side liquidity, then sell side, and then buy side. So this will become a balance price range. And you could perfectly look at that. It filled it perfectly and kept moving up. So if you put your limit on this fair value gap, you never get the chance to participate in this move right here. Moving on to the fourth example, and this is New Zealand dollar against US dollar, the daily chart. So guys, I'm not trying to make this video long on purpose, but with more examples you will understand even better. All right, so I want you, after this video, I want you to collect examples by your own. All right, don't rely on the examples I'm showing you. If you can identify them by yourself, then you will understand the concept better. Now we have this price action. Try to identify a bullish price balance price range. Pause the video and identify it. As you can see, this candle right here, after taking liquidity, this candle offered buy side, then sell side, and the next candle offered buy side. So this would become a balanced price range. Maybe you could you see this this shift on market structure, and you would never have the chance to participate because maybe you didn't see a fair value gap right here. But this is a valid balanced price range. So you can if you can see here, excuse me for a second, you can see that this candle right here tapped into this balanced price range and continue higher. All right, so this is a valid PDRA. This is not just random. All right, and for our last example for this video, this is the US dollar index from today's price action. You can see that this is a fair value gap right here, and we can see that this candle here offered sell side, then buy side, then sell side. So this is a bearish balanced price range. Now you can see that this was I put an I here because I want to see price retrace to here and leave this fair value gap open and then continue to take this liquidity from here. And this is exactly what happened. You can see that, so this is CPI, so there was a little bit of volatility. You can see that price filled this balanced price range, leave this fair value gap open, and then continue lower, taking this sell side. One more time, tapping into this balanced price range, and then it's continuing lower. So we have come to an end of this video. I hope you liked it. It's a little bit long, but I believe it worth it. I hope you liked it, and if you have any questions, don't hesitate to DM me on my Twitter account, or you can leave a comment on the comment section and I'll answer you as soon as I can. Happy trading and good luck.